Rally in tech that we have seen because it's pushed the Nasdaq, it's pushed the S&P to record highs this week as excitement surrounding artificial intelligence really sweeps Wall Street yet again. The tech sector on track for its best week in about 7 months. For more, we want to bring in John Stoltzfus. He is Oppenheimer's chief investment strategist. John, it's great to see you again. So talk to me just about how you're looking at this excitement that we're seeing play out in a handful of these tech stock names again, and really what this signals for the broader market moving forward.
Great. Well, Sheldon, great to be on Yahoo Finance, speaking with you and Brad today. I have to say, when you look at this, what it really reminds everybody is we're all on the upgrade cycle because technology is deeply embedded in the lives of both business and consumers. It's not just about phones. If people who have apps for airlines, newspapers, magazines, I've recently gotten notice on older phones when they try to upgrade. Sorry, your operating system needs to be upgraded, and you find out your old phone or your old computer can't take it. It's time to get back to the electronics store. And probably some of the results that we saw, at least from one company, I can't mention specific names because I manage money, but would indicate that electronic sales are not dead, and we think they're likely to increase. So this all looks like part and parcel of the fact when the genie comes back, when the genie comes out of the bottle, it doesn't go back in, folks.
And so with that in mind, John, not talking specific names, but talking perhaps themes more broadly that we've seen prevail in the markets, how much more legs do you think there is to this trade, especially within generative AI, as we've seen companies who have talked about it on earnings calls or announced some type of product or software update, they've seemed to be the beneficiaries?
Well, we'd have to say, Brad, you know, the old adage of trees don't grow to the sky definitely will step in at some point. But right now, it doesn't appear that technology in this AI story is approaching a level where it's going to stall. It looks like it's still morphing into other things. Essentially, if you don't get onto a plateau, and that's what happened in the tech bubble, is it's sort of plateaued. People were talking about, we're going to have 1 million eyeballs in so many years, but no profitability to them. This is companies that are profitable, that are growing and expanding, and innovation is really taking hold. That said, any catalyst that the bears can find to sell and take profits without FOMO, they'll do it. And, you know, we had that for a while ago. If you think of that company you were just talking about that's now the largest in market capitalization, the S&P 500, just a few weeks ago, there were a whole bunch of people saying it was done. And it wasn't done at all. It was just ready to morph into the next chapter. So we remain very positive on technology, communication services. We like industrials, but we also like financials. And we think consumer discretionary is desperately oversold this year. If you look at it from the lows of last year, it's still up very nicely, over 20%. So it's just different sectors get haircuts from time to time and pauses. But this appears to be a good time for equity buyers.
So, John, given that you have your year-end target for the S&P is 5,500, and here we are today just above 5,400, what do you need to see in order to raise your target or be convinced? It sounds like you are convinced that maybe the market's heading even higher this year.
Yes, Sean, I would have to say here that, you know, when we came into the year, we were one of the highest on the streets, if not the highest. I think some people say we were the highest. We weren't paying a lot of attention to exactly were we the highest or not. But we came in at 5,200, had to raise it in the first quarter, raised to 5,400. And our discipline is we don't raise our target unless the S&P closes at or above our price target. So it would appear imminent that we'll have to consider whether we're going to raise our target for year end or not, probably over the course of the next few days or next few weeks, depending upon how the market is treated by investors and traders.
And John, as we wrap up this week, it's been heavy on the econ data front. We also had the Fed meeting this week. And one of the top lines here, one of the questions you posed in a recent notice, the multi-trillion-dollar question on policymakers' minds these days, it's are we done yet, or are we at least near done with tightening? So coming off of that meeting, what do you think?
The song remains the same. You know, when Powell came out of that meeting, and the look at the dot plots was still like that was affected by pre-CPI numbers, most likely. But we're still in that period where overall the Fed is cautious before it determines that it will start cutting. It is signaling, you know, it looks like one cut this year. We came into this year thinking when the Fed was saying it was going to go 3, we said, well, perhaps 2 times. And then when everybody was saying 3 to 5 cuts, and some people 5 to 7 and even more, as I recall, because they thought the economy was falling apart, but we don't believe. We thought, you know, probably it may not even happen, but we expected late in the second half, and the November to December, where everybody's looking at these days, looks good to us. And we think the Fed will do it not because it feels the economy is falling into recession or it finds itself in recession, but rather that the Fed feels that it's time to give a down payment to both Main Street and Wall Street to say, look, we can cut. Here's one cut for the beginning of 2025. Relax. You know, and that's really there's a dialogue going on between the Fed and the markets. The market never trusts the Fed. That's typical. But the Fed, since Bernanke has been so communicative, we think it's more advisable that the market listens to the Fed and realizes that the Fed this cycle appears to be our friend.
Yeah, and the added juggling job of seeming apolitical as well along the way. John, a ton of great insights here. Thanks so much for joining us here this morning. Happy Friday to you. John Stoltzfus, who is the Oppenheimer Chief Investment Strategist. Good to see you.